When the North Queensland-based firm Storm Financial collapsed, owing $3 billion after the share market dived in late 2008, thousands of clients suffered crippling losses. Many who were elderly lost their homes and life savings after borrowing against their homes to invest, as well as taking out hefty margin loans after banks allegedly overestimated their incomes. Today, the corporate watchdog ASIC announced it's begun legal proceedings against Storm's former directors and 3 banks involved with the Storm investment model. And it's also seeking compensation for investors. Annie Guest reports.
Despite a lifetime of work, Cecily and Robin Hurd keep their remaining possessions in this shipping container. In their 70s, the Hurds have gone from being self-funded retirees to losing their home.
I didn't intend to finish things up this way. Thought life was meant to be happier.
Dreadful way to live, really, isn't it?
The retired school teachers are now forced to depend on government assistance after borrowing against their home, as well as using their life savings to invest $500,000 through Storm Financial in 2002. The financial advice company leveraged investors into Storm-badged products that were managed by various investment funds.
Hi, welcome to Storm Financial. Please, come in.
Loans were arranged through banks including the Commonwealth, Bank of Queensland and Macquarie Bank.
The mortgaging of the home really worried us, yes.
What did you ask them?
Well, time and again we both asked that was there any opportunity, any chance at all of losing our home? And our advisor said, no, don't worry about that.
The Hurds had also taken out a margin loan, borrowing money to increase their shareholdings in managed investment funds. Under these terms, the lender, in this case the Macquarie Bank, would sell the shares if the stock fell below a certain level. The bank would take its share of the loss and anything remaining would go to the client, in this case the Hurds. But first, the investor is given a margin call and allowed the opportunity to deposit more money to avoid the fire sale. The Hurds say they never received the margin call and lost almost all their money. Now they have to live with their daughter.
We're fortunate in that we've been able to rent here, part of the home, and had it not been for that, well, we could have been out in the street.
We signed a piece of paper saying that that's the way we want to go.
Their daughter, Sharon Leash, and her husband, Eric, had retired in their early 40s after selling their business. But they too invested through Storm, losing $4 million. They've returned to the workforce, but could soon lose their home as well.
We weren't given any notification, any margin calls from the banks or Storm. We were in a position where we could have sold down our assets to pay down that margin to get us back on track to survive the crash, or we actually could have reinvested to bring it up had we wanted to.
Their teenage son also invested through Storm and lost all his savings. But today, the corporate watchdog has launched legal action against Storm's former directors, the Commonwealth Bank, Macquarie Bank, the Bank of Queensland, and also the franchisees of a branch of the Bank of Queensland. The Australian Securities and Investments Commission released a statement saying,
ASIC has maintained that a commercial resolution is the preferred approach. Unfortunately, discussions did not result in a satisfactory outcome. ASIC is bringing these actions to seek compensation for investors who have suffered losses.
Storm's founders and directors, Emmanuel and Julie Casamatis, who were known for their luxurious lifestyles and lavish overseas trips with clients, are alleged to have breached their directors' duties. They blame the banks for failing to deliver the margin calls.
They dropped the ball. They didn't do it. They had an oh shit moment. Now, whether it was because data was deficient or whatever the case may be, they did not do what they should have done when they should have done it.
ASIC alleges all three banks operated an unregistered managed investment scheme. The corporate watchdog also alleges the Macquarie Bank, the Bank of Queensland and the franchisee of its Townsville North Ward branch displayed unconscionable conduct.
What we expect to see here are claims going to behaviour by the financial institutions that did result in substantial loss for the investors, covering a whole range of matters, for example, margin loans, indeed participation in the basic Storm financial model where investors were encouraged to gear up and then gear up even more and consequently suffered enormous financial losses.
Corporate law expert Professor Ian Ramsey believes investors would have been better off with a commercial settlement with the banks because litigation will be a long, drawn-out process.
So they'll fight this, they'll contest it, and if they lose, there must be a real prospect that they will then appeal. So regrettably, this could go on for a number of years.
The Commonwealth Bank has previously admitted it wasn't proud of how it lent money to Storm customers and provided compensation to a number of affected people. But today, all three banks released statements declaring they'll defend what they describe as unsustainable allegations. None of the targets of ASIC's legal action agreed to an interview with the 7:30 report. Meanwhile, Sharon Leash and her family are disappointed the banks did not settle, but they're pinning their hopes on ASIC to win the court battle and recover their losses.
I hope ASIC follow through with it. I hope there is light at the end of the tunnel.
Well, I've got to stay optimistic. Yes, I'm optimistic.
Annie Guest with that report.